joining us today with our We Got This webinar series. This webinar series is intended to bring experts of their knowledge base directly to employers and employees throughout the region of the Seattle metropolitan area. The Chamber has really focused on putting these webinars forward to serve all of their members, most of whom are small businesses. So I'm personally very excited today to hear about this topic. Even as we were preparing for this, I feel like I've learned a lot, both about the leave laws that keep changing and keep being added to, and unemployment and the evolution that's happening there. So very excited for both of our sections that will focus both on unemployment and on leave laws and how you can navigate that as an employer. I wanted to give a special thank you to our event sponsor, Comcast Business. I think we're all very appreciative for the internet capabilities that we all have these days, and very grateful for Comcast Business to make this event possible. Our event partner is Business Health Trust and the Seattle Metropolitan Chamber of Commerce. Business Health Trust partners with the Chamber to provide health insurance benefits for small companies. And the Chamber here, just does incredible work advocating for and serving members of all sizes, including small businesses. My name is Sarah Childs. I'm part of the Chamber team here and also lead the Business Health Trust as the Executive Director. I'm very excited to welcome our first speaker today, Chris Bowen from Washington Employment Security Department. I'd like to welcome her. And, as we're talking today, we will have the Q&A panel available, so you can type your questions in there. We will try and answer some questions live, but might not be able to get to all of them. And then we will also try and answer questions after the webinar is over if we don't get to all of them. Our panelists, our attorneys from Davis Wright Tremaine will be sticking around to answer questions additionally. If you have technical difficulties during the webinar, please use the chat box and we'll do our best to address those. So with that, I'd love to welcome you, Chris. Thank you so much for joining us again. We spoke a few weeks ago just as things were evolving, and lots has changed in between then. So I'd love to just start by having you introduce yourself.
Thank you for having me back. I appreciate it. My name is Chris Bowen, and I've been with the Employment Security Department for almost 20 years now. My current position is a lead policy analyst, though I've been all the way from the intake agent who takes the claims through adjudication, training, and quality control before my current position. And this is my third recession that I've been through. So I have a little bit of experience going through all of this, but I'm happy to talk to you and answer your questions today.
Great. One of the things that I wanted to start with is the department has done a great job of issuing additional guidance and emergency rules on a regular basis to be providing resources and clarity for folks. Could you start by telling us about what the new emergency rules that clarified the definition of lack of work published on Friday mean? What are some high levels that folks should know about those?
Okay. These, generally speaking, under normal conditions, some of the reasons that people are no longer working might fall under the category of a voluntary quit from work. Whereas in this this pandemic event that we're going through, some people are having to leave work under circumstances because, well, their business shut down, and because they have health issues that prevent them from being able to do the work, or also keep them from basically spreading potential COVID throughout their own household and with other people. So these new emergency rules were put into place to kind of put a little bit of definition around what we would consider a lack of work during this particular time versus when it would be, a voluntary quit or some other type of separation. So emergency rules that came out on Friday, well, they were clarified on Friday. They actually came out last Wednesday, but they had to make a technical update to them. But basically, it puts the easy one up there first, where governor says you guys have to stay at home. We're considering that a lack of work. So that's right up there up front.
Okay.
To clarify that a little bit further, there are some industries that allow people to telework with pay and some that don't. So if it's somebody who does not have the ability to telework with pay, then they are considered to have separated due to lack of work. If you have the ability to telework with pay, you should be teleworking with pay. So also, it clarifies outside of the government order to stay home, who would actually qualify as a lack of work. So in this case, it would be people who are high risk for COVID based on the reasons that the Centers for Disease Control has issued as someone who is high risk. Or it could be for somebody who has a member of their household is considered at high risk, and we don't want people to be bringing this to them in their household. So we would consider those people as a lack of work. If they are providing direct care to somebody identified as a high-risk person, so this might be, they may not live in your household, but you have to take care of your elderly parents or something like that. Go grocery shopping for them, go to their house on a frequent basis and take care of them. They may not normally live in your household, but you have direct care that you're providing to those people on a regular basis. The last qualifier under that would be the people who are working at a work site that is not your home, so you're not teleworking, where the work site doesn't follow the guidelines published for the protection of the workers from COVID exposure. So for example, they don't have protective equipment at the work site. So that could be considered a lack of work as well. And
Okay,
as I
that's
mentioned
helpful.
before, okay, good.
Yeah, no, I think that's helpful. You know, some of the takeaways from what you were talking about, it really kind of clarifies and expands that lack of work to folks that are, you know, maybe high risk by CDC guidelines or needing to take care of them, or kind of clarifying that if the business is shut down because the governor has issued that also qualifies for lack of work as a reason. Is that an accurate description?
Yes.
Great. So we've already had a lot of questions come in around the federal additional dollars that are going to unemployment. So I'd love to shift a little bit to that. And the question that everybody keeps asking is, you know, when will that extra $600 a week be implemented? Could you talk a little bit about the timeline? I know, you know, it's a moving, evolving process, but some of the expectations around what that will look like, who is eligible for that, and if it will, you know, what people need to do.
So I'll talk about all three programs as a whole, basically, because they're all going up at the same time. The first one is the Federal Pandemic Unemployment Compensation, or FPUC. That is the additional $600 that is added to the weekly benefit amount for each week for eligible claimants. To be eligible for the FPUC, you have to be eligible for at least $1 in underlying benefits. So if you're on a regular unemployment claim and you are, you know, working part-time still, you have to report your earnings when you file your weekly claim, and those get deducted from your weekly benefit amount. If you're eligible for at least $1 of regular benefits, then you would receive the additional $600. So let's say all you have left for that week is $1, so you would receive a check for $601. But if you are not eligible for at least $1 of underlying benefits, then you would not be eligible for the $600. So it's kind of all or nothing, basically. Now the $600 is added on to regular unemployment compensation, It's added on to shared work compensation. It's added on to TRA, it's added on to the PEUC, which I'll talk about in a second, and it's also added on to PUA, which I'll also talk about in a second. The only program that it currently does not get added on to are our state training benefits.
Okay.
So
So
that
if someone's
is
on
FPUC.
standby, partial work. Okay, so standard, kind of some of the ones that folks have been, using the most right now, standby, shared work, partial work, that $600 is
Right.
kind of added on to the unemployment benefit there.
Yeah, those are considered
And,
regular unemployment benefits. So the three
okay.
programs that you mentioned. So yeah.
And what about gig workers, owners, people that are traditionally not eligible for unemployment?
So those, if they do not qualify for a regular unemployment claim, they would fall under the PUA, which is Pandemic Unemployment Assistance. And I know we got lots of
Okay.
acronyms out there, so it's really important. It's really confusing because they both have the word pandemic and unemployment in them. So it's really easy to get them confused. So well, let me talk about the emergency extension first before I get to PUA.
Okay.
PEUC, which is Pandemic Emergency Unemployment Compensation, is the 13-week extension that is added on to regular unemployment claims that have exhausted their benefits or their claim expired. Those 13 weeks of benefits are available up until the end of this year. And I believe the last week of that is the week ending December 26th. So
Okay.
basically, if you have an existing unemployment claim or you have an unemployment claim that expired last year, July 5th, sorry, I have to get my calendar out, July 5th or later, you could be eligible for the PEUC compensation. And basically that just adds on 13 additional weeks. Now, I mentioned the $600 earlier. If it's between April 4th and, I'm sorry, March 29th, the week ending April 4th, and the week ending July 25th, the $600 is also added on top of the PEUC. So not only do you get your regular benefits and the $600 while you're on regular unemployment, but when you move into the 13-week of extension, you can also get the $600 added on through July 25th. So that is the 13-week extension. That has it's like an application process. It's more of like reopening a claim. So you will still have to fill out something for the PEUC. And we do check with every quarter change to see whether or not you're eligible for a new claim. Because if you're eligible for a new claim, you have to go with the new claim and not the extension. But it is possible that you could receive a couple weeks or a few weeks of the PEUC, then have to file a new claim and you receive the benefits on your new claim. And if you're still not back to work before the end of the new claim, you could go back to finish your 13 weeks of PEUC. So that's an important aspect of it. And we hope that nobody's going to be unemployed, another half year after, after they become eligible for a new claim. Hopefully everybody will be back to work by then, but it is a possibility. So that is PEUC. So you asked about PUA is what we're calling it. It's PUA, Pandemic Unemployment Assistance. And I apologize because I talk in shorthand a lot. We use a lot of acronyms at work, but it is Pandemic Unemployment Assistance, and that is PUA. And that is for the people who don't qualify for an unemployment claim. Now, it's not for everybody who isn't eligible for an unemployment claim, because there still are requirements to be eligible for PUA, but it picks up a lot of people who normally would not be eligible. It's going to pick up more people than it's not. So PUA doesn't have a 680-hour requirement to qualify for. It is for people who work in self-employment or the gig economy. It's for people who work part-time or full-time, but just may not qualify for regular unemployment based on the hours requirement. So basically what happens is we take, if you're self-employed, you can add your self-employment earnings into the claim, and we will base your weekly benefit amount and the maximum benefits payable on the information that you provide. When you fill out your application, it will ask you to put in your net income for the 4 quarters, and it goes by the calendar year of 2019. For this. So my recommendation is, if you are filing for PUA, to have all of your documents together that can prove what your income was for that time period. I would also advise to go ahead and scan them into your computer beforehand, so that while you're filling out the application, you can just upload them to the application. Because what will happen is, until we can actually verify the documents that and your income, you're going to receive the minimum weekly benefit amount. And then once we verify the income, we will update the weekly benefit amount. You'll get a supplemental check for the difference. And we will be able to send you a document that says how much your real weekly benefit amount is and how much you're eligible to receive. PUA pays up to 39 weeks of benefits. However, there are some people who would be coming to PUA because they're no longer eligible for regular UI and PEUC. So if you had received UI and PEUC, the number of weeks you received under those programs are deducted from the 39 of the PUA. And I know this is a lot of information, but it's important to know that not everybody is going to get the full 39 weeks.
Okay.
And
Lots of acronyms.
implementation.
I'm trying to wrap
Yeah,
my head around all those acronyms.
Well, it's easier than saying
let me ask a
pandemic unemployment
clarifying.
assistance each time.
Yes, it's very true. So, for example, somebody who is, needing to quarantine, they're a high-risk individual and might have been self-employed, they would be eligible likely for this, is it PUA, Pandemic
PUA.
Unemployment Assistance?
Yes.
And is the current website, is that set up to be accepting those sorts of applications right now?
So now we're into the implementation part of it.
Okay.
The plan is to have everything operational this weekend. The thing about the PUA, though, is you have to have filed and been denied regular unemployment benefits, because you cannot be eligible for UI or PEUC while you're collecting PUA. So you have to go into our website and file for regular UI first and be denied. And what we're recommending is doing that ahead of time, because you don't want to get stuck on the website filling out both your UI application and the PUA application all when everybody else is trying to do it when we go live this weekend. So I recommend going ahead and filling out the UI application now and getting your denial information. And then once the PUA application goes live this weekend, the only link that will be available for an application is the PUA application. So it's going to be hard to get confused on what you're applying for at that time. And it's only going to let you apply for what you are potentially eligible for.
Okay, so folks who think that might be eligible for this PUA, so for example, a self-employed person, they should go on now, get denied, and then when things go live, hopefully this next weekend, they'll be able to go back in and use that link to apply for the PUA.
Exactly.
Okay. I'm gonna just be talking in acronyms, I think, the rest of the day. I'll have to look them up. So That's very interesting. And do 2% shareholders of S corps, would they potentially qualify under PUA?
Potentially. A lot of corporations, corporate officers elect to cover themselves for unemployment.
Uh-huh.
So if they have elected to cover themselves for unemployment, they would just file a regular UI claim. And
Okay.
then they could be
And
eligible
so,
under that.
but the process is the same, right? Apply
Correct.
for UI, and then you either get denied and then do PUA,
Hmm.
or if you were paying in, then you would just continue through the regular unemployment
Correct.
process. Okay.
Correct.
And so that's kind of implementation of that piece for the self-employed, gig worker economy. What about that kind of the extra $600 per week benefit?
The,
What's the process and implementation around that?
So all three programs, FPUC, which is the $600, PEUC, which is the 13 weeks, and PUA, which is the gap filler, if you will, for those people who don't otherwise qualify. Those are all going to be implemented this weekend. And for those people who
Okay.
are eligible, going back to the effective date for FPUC and PEUC, the effective date was the week ending April 4th, so 2 weeks ago. If you were claiming at the time, the $600 will be sent to you as a supplemental check, or in addition to whichever weekly benefits you're applying for this week. For PUA, now I'm getting my acronyms mixed up. So for PUA, the effective date goes back to the week ending February 8th. It's the first full week after the CARES Act enacted the PUA. So if you were affected that early by the COVID pandemic, then you could potentially be eligible that far back. But it has to be a direct effect of the COVID pandemic is the reason that you weren't working. So it will let the person who would qualify that far back file weekly claims for all of those weeks, so they could get caught up.
Okay.
And
And so
everything's going to happen
PUA,
this weekend.
it'll be a busy weekend.
It will be.
So clarifying, the PUA, which is the gig workers and self-employed folks, that could go back if they are having economic impact back into February, when this all started, and kind of all of the other things, the $600 extra weekly benefit for people on normal unemployment assistance, that kind of goes backdated automatically to the beginning of this month, so the week ending 4/4.
Correct.
I have another question about the lack of work definition. If folks have children at home because daycares and schools have closed, is that incorporated into the lack of work reasons right now?
No, it is not. The way that the emergency WAC was written, it does not include those who have to stay home and take care of their children. However, it is specific to the PUA.
Okay.
It is one of the definitions of what qualifies somebody for PUA.
Okay, so that could be under the PUA, pandemic unemployment assistance. Is that the
Yes.
definition? Yeah, so if
Gold
someone
star.
is needing to stay home with their children because daycares or schools are closed, they could apply for that. They would go in, maybe get denied through regular, and then apply through the pandemic unemployment assistance, which goes live this weekend.
Right. Now, there is a slight, what's the best way to say this? There is a potential that they could still qualify for unemployment benefits. If they are totally unable to do any kind of work, whether it's at home or outside of the home, because they don't have care for the children who are not in school or in their daycare facility, then they would not be considered able and available for work under regular unemployment insurance. But if just because somebody's children aren't in school doesn't necessarily mean they can't do work. I know that many of our staff have their kids at home. A couple of my friends have their toddlers at home, and they're trying to work at the same time as their toddlers are running around the house, but they are still able to do their job. They might just have to do it in different hours. So if somebody has a situation where they can still work at home, even with their children at home, then that doesn't automatically deny them on their availability. They just have to show that
Okay.
they are able to continue performing suitable work, which is work that can be performed under the guidelines of quarantine, isolation, and the governor's stay-at-home orders.
Okay. I have a question specific. I'm one of those people with toddlers running around, so it's definitely. I was thinking, am I really able to work? I don't know. It's a little crazy sometimes, but you know, we're all doing our best here. So one last specific question for folks who have hours that were cut. So if they are at 32 hours a week, for example, and they're normally full-time, are they eligible for unemployment? Would that fall under partial work? You know, talk to me a little bit about that.
So for unemployment, they just, in order to be eligible on a week-by-week basis, they just can't be working full-time or having earnings or making wages that are in excess of what the weekly benefit amount is. So if you've had your hours cut and you are underneath your earnings are calculated underneath what your weekly benefit amount is, you're still going to be eligible for unemployment. So
Okay.
it's just basically there's a formula that's used, and you probably just don't want to get complicated in that, but there's a earning deduction charts on our website to show how the earnings deductions work. But as long as you don't exceed the amount of your weekly benefit amount, you can receive unemployment benefits as long as you're meeting all of the other requirements.
Okay. And shifting to the employer perspective, could you talk a little bit about, you know, what do employers need to do? They're getting notices from ESD. They might not be in their offices right now. What do employers need to do in this time as people are filing for unemployment?
Well, the best thing you can do to help us out is to respond to the questionnaires that we send you regarding the reason for separation. Basically, well, I will qualify that. If the reason for separation is a lack of work, laid off due to a lack of work, and the employer does not disagree with that, or yes, if the employer agrees with that, then you don't have to return the paperwork.
Okay.
But if for some reason somebody says this was a lack of work and they actually quit coming to work, you want to make sure you fill out the paperwork and explain, you know, what happened so that we can get the right issue set, because that person may not qualify for benefits at all based on the reason that they are no longer working. Also, if there are availability issues, the employer can bring those up as well. But right now, the majority of people are truly laid off due to lack of work. So that's not that big of a deal if you don't respond, and that's how it's set up in the system. Now, I will tell you that my unit writes all of the labor dispute issues, and we still have a few people who are reporting their separation as due to a strike. And so if you get paperwork that talks about a labor dispute, a strike, or a lockout, please send that back so that we can clear the issue up correctly, because any issue that's on a claim will hold up payment for them. And the best thing you can do is respond to paperwork that we need to address to help get these issues cleared so that they can receive their benefits.
Okay. So if there's an employee whose claims, you know, are pending, needing more research, for example, the best thing they can do is contact their employer and make sure they respond to the inquiry.
Exactly.
Okay.
Exactly.
Great. Well, I'm so thankful for your time. There are some additional questions that have come in, and we will kind of address those at the end of the webinar or during the next piece. So if you have typed in a question, know that we will do our best to get to those. And with that, thank you so much. And
Oh, sir,
I will
sorry.
welcome up the next. Oh yeah, go ahead.
Can I just want to address one other thing really quickly,
Yeah.
because we did talk about this last time, and that is standby. Once you have an unemployment claim, whether it's regular unemployment or it's PEUC, you can be eligible for standby status, which basically is a work search waiver. It's not a particular type of claim, it's just a waiver on the claim for work search. While in fact, an emergency rule is going to be coming out in the next day or two, basically saying that while the governor's orders to stay at home are in effect, everybody who is qualified for unemployment is considered to be on standby, and work search is optional. Once the governor has lifted the stay-at-home orders, that's when people can start applying for standby separately if they haven't returned to work yet. So let's say people who are scheduled to return to work May 4th when the order is lifted, they would not have to request standby between now and then. They will be taken care of under the emergency rule. However, if it's somebody who's not going to return to work until, say, June 8th, they can request standby starting the week of May 4th through June 8th. And now those weeks that are covered under the governor's order don't count against each individual claimant's 12 weeks that they have in the hopper. So that has been kind of a change that we've had over the last couple of weeks, because there have been so many questions about standby and why do I have to look for work if the governor won't let me leave my house.
Mm-hmm.
So we kind of put that in conjunction with the governor's orders to make it easier on both claimants and employers, because frankly, the employers don't have the time to be sending in lists and lists and lists of employees they want on standby.
Great. Thank you for that clarification. That's really helpful.
You're welcome.
All right. Well, with that, we're going to shift a little bit to talking about paid leave laws, and we are also going to understand a little bit how unemployment and paid leave kind of mesh together a little bit too. So some of the questions that folks have had for Hras, we will be able to hear additional information from the folks at Davis Wright Tremaine. So I will ask you guys to turn your videos on and introduce yourselves.
Hello, I'm Angela Vogel. I'm one of the attorneys at Davis Wright Tremaine presenting today, and I'm going to be talking about the leave laws, the local, state, new federal leave laws, and how some of that interplays with unemployment benefits.
Hi, I'm Rishi Shah, an associate at the DLET's Portland office, and I'll be talking to you about the tax credits associated with the two federal laws that we'll be discussing, the FFCRA and the CARES Act.
Great, thank you so much. I will turn it over to you. I will turn my video off while you guys are presenting, and then join you at the end for some Q&A.
Great, and is someone going to advance my slides? Oh, perfect, awesome. Can we go one more forward? All right, so I thought we would start with the state and local sick time ordinances, because they provide coverage for employees in Washington State. The Washington State sick and safe time law pertains to non-exempt employees in Washington State. And the law covers medical issues for both employees and their family members. So that can include an employee who has symptoms of COVID-19 or who's otherwise sick, employees who are quarantined or in isolation because of diagnosis or possible exposure to COVID-19. It could cover employees seeking medical treatment or diagnosis related to COVID-19 and caring for a family member for those reasons. And so that sick time is available to employees for those reasons. It's also available when a child's school or place of care is closed by a public official. So our order with Governor Inslee closing all our schools, employees can use their available paid sick time to cover that absence. And it also covers workplace closures by public officials for public health and safety reasons. So, the closure of our non-essential businesses in Washington State. This time off is paid for by employers. So employees earn 1 hour for every 40 hours worked of sick time under the law. And so the employees pay out at the regular rate of pay for this sick time. One thing to keep in mind that I think is important also for our FFCRA, the Families First Coronavirus Response Act, another acronym for you, is that employers cannot mandate the use of this protected sick time. So the time is available to employees for protected reasons, but employers can't require the use of that sick time. Another thing that I should point out that I think a lot of employers didn't necessarily realize until we hit this COVID-19 pandemic is that if you have a PTO bank, so you have a PTO policy that includes sick time, vacation time, personal time, whatever, and you don't segregate that sick time, you don't track it separately, that the employee now has the use of that entire PTO bank for protected sick time reasons. So it's something that I think employers are going to be thinking more carefully about going forward once we make it through this crisis, and how they want to structure their paid time off and their sick time. We recommend that that be separate from the PTO, just so that you have the ability to, have some discretion and control over it. We also have a Seattle sick and safe time law that relates to employees who work in Seattle, and it applies to exempts and non-exempts, as does the Tacoma sick and safe time law as well. But the Seattle law was recently amended because of the COVID-19 crisis to provide some broader uses for employees. So in addition to the reasons that we talked about for Washington, the Seattle sick and safe time law now covers school or place of care closures for family members. So if my siblings' place of care, school or place of care closes, I can stay home from work to take care of them because of that closure. And there's no requirement that there be a public order closing down the school or place of care. So broader use there. Also, employers who are that tier 3 employer under the Seattle law, who have 250 more full-time employees, those employees can now use sick time for work slowdowns, so reduced hours, that sort of thing, closures, for any health and safety reason. There doesn't have to be a public order requiring that closure. So, and one of the things that Seattle has done is put out some more Q&As, and we've talked to some of the representatives there. And it's the city of Seattle is taking the position that even if the workplace is closed and there's not necessarily work available for the employees to do or shifts for them to work at, the employees can still use that sick time to cover work they would have otherwise been performing. So we have the sick time. Can you move on to the next slide, please? All right, and we also, oh, one back. Thank you. So we also have the Washington State Paid Family Medical Leave Law, which is a new law that went into effect in January 1, 2020. Now, this law covers, absences. It's a partial wage replacement program funded by the state, by employees and employers, and the state provides these payments to employees for serious health conditions. So the bar is a little bit higher than just being sick or a medical appointment. It has to be a serious health condition. One thing to keep in mind is that COVID-19, if it is serious and requires hospitalization, definitely could qualify as that serious health condition. Or the employee could have some sort of underlying condition, some immune system issues, et cetera, that could make them need leave, require leave to be away from the workplace, to be away from the public because of their underlying condition. This PFML, paid family medical leave, is not available for school closures. Something else to keep in mind is that it's a portable benefit from employer to employer. So an employer who's laid off or terminated or not working could still qualify for the benefits if they meet their eligibility threshold based on hours worked. The other thing to keep in mind is that ESD is providing these benefits, and there's a very, very long waiting period. At least 10 weeks is what I've heard over the past 2 months. It's taking that long between the time the employees are applying and actually receiving funds. So it's not, to me, it sounds like the unemployment benefits are going to be a much more immediate source of income replacement for employees. And then we have the FMLA as well, as it existed prior to the emergency amendments, that provides unpaid leave for serious health conditions. So that could be another protected leave that someone may take. All right, next slide. So this, I think, chart that the ESD has published is a really great tool. And I know the ESD is working on updating it because it's not entirely up to date and there were some issues that need to be clarified. But I think this chart is a really great starting place that I use all the time to figure out what type of leave, you know, is there sick leave, is there unemployment, is there PFML that may cover this absence. And as you can see from the chart, you know, some issues may qualify for different buckets of leave or unemployment benefits. It's just going to depend on whether or not the employee actually has those benefits available to them. And so what I generally tell employers is, you know, provide that sick time for those COVID-19 qualifying reasons. Let employees know if you think that their absence may, you know, they may be eligible for unemployment, but don't guarantee that they will get unemployment because the state is making that determination. So this chart, like I mentioned, is a really great starting point. And I included a link as well there. Next slide, please, and we'll flip through these next two really quickly. So Chris already covered the recent unemployment emergency rules and the lack of work. So here's just some written text about what the new rule says. I won't go over it because I think Chris already handled it. Next slide. And then likewise on the CARES Act and the additional supplemental payments that employees will receive through July is my understanding, and then the extension of regular unemployment benefits that will be extended through the end of this year. Next slide, please. All right. So one of the new laws that we are advising on and that employers are trying to wrap their arms around is this Families First Coronavirus Response Act, the FCRA. And within the FCRA, there are two different leave options. One is this Emergency Family and Medical Leave Expansion Act. I'll call it Emergency FMLA. And then the other is the Emergency Paid Sick Time Law. And they do two different things, and I'll talk about both of them. And then Rishi's going to jump in and talk about the tax benefits and tax implications from these laws. So both of these laws, the sick time and the emergency FMLA, are a temporary expansion from April of this year through December of this year. So it's a temporary expansion of FMLA. The emergency FMLA provides for 12 weeks of leave when an employee is unable to work or telework due to the need to care for a child because of a school or childcare closure, or because the school's or the child's usual childcare provider is unavailable. So this emergency FMLA leave is only available for school or childcare closure issues. The law applies to employees who have fewer than 500 employees. That includes both nonprofits and joint employers. And as part of the rules, you count the joint employees, those, you know, if you have temporary workers in that count to determine that number. The leave is available to employees who've been employed for at least the last 30 calendar days. And there are a few exclusions to the applicability of it. The first is healthcare provider employees. The second is first responders. And then businesses with fewer than 50 employees for whom the extension of a benefit would jeopardize the viability of the business as a going concern. And so we received some recent regulations from the DOL on these issues and, you know, the reasons why those smaller employees, would be adversely impacted by providing these benefits. So, the guidance is to, to document the reason why it would jeopardize the viability of the business as a going concern. One thing to keep in mind about this leave is that the first 10 days of the leave are unpaid, though the employee has the option to elect to use paid time off. And if they're eligible for this emergency sick time, that would run concurrent with this first 10 days. And then after the first 10 days, the employee gets the lesser of 2/3 of their regular wages, or $200 per day, and it's capped at $10,000 total. And so there's been a lot of conflicting guidance on the Q&As and in the regulations themselves that have been amended already, even though they've only been out for a week or so, about whether or not during that 10-week period, you can require concurrent use of your paid time off. And so the general consensus is yes, you can require that as a top off. Though keep in mind, as I mentioned, under the Washington and Seattle sick time ordinances, you can't require that employees use available paid time off. Their available sick time, excuse me. It's at their discretion as to whether or not they want to use that. Okay, next slide, please. And then finally, as I've been talking about, the FCRA law also includes an Emergency Paid Sick Leave Act. And this applies to all employees, regardless of whether or not they've been employed for 30 or more days. It provides 2 weeks of paid sick time. So that's 80 hours for full-time people, and then on a prorated basis for people who are part-time. And the law provides for 6 different reasons why employees can take this. One is if the employee's essentially subject to a federal, state, or local quarantine or isolation, and they're able to work and there's work available to them. 2 is if the employees have been advised by a healthcare provider to quarantine due to concerns related to COVID-19. 3 is if the employee has symptoms of COVID-19 and they're seeking a medical diagnosis. 4 is if the employee is caring for a family member, essentially, or household member who's subject to 1 or 2 or above. And then 5, if the employee is caring for a son or daughter due to a COVID-19 related school closure. So that's that first 2 weeks of the emergency FMLA time period. And then employees are compensated for reasons 1 through 3. The compensation is the employee's regular rate of pay, or $511 per day. There's a cap on that. And then for reasons 4 through 6, the employees get compensated at that same rate as the sick time pay, which is 2/3 of the regular rate of pay, or $200 per day, capped at $2,000 in the aggregate. And one thing to note here is that we don't know what number 6 means. We don't have any guidance or further information on that. So hopefully we get more on that soon, but not much more there. And now I'm going to hand it over to Rishi in the interest of time to talk about some of the tax implications related to these programs.
Thanks, Angela. Next slide, please. So I'll discuss the tax credits that are associated with both the FFCRA and the CARES Act, the 2 federal laws that were recently enacted in response to the crisis. And so they both offer tax credits for certain COVID-19 related wages that are paid to employees. Just a brief overview of both types of tax credits. The FFCRA offers credits for, as Angela mentioned, the qualified sick and family leave paid to employees who are unable to work due to COVID-19. And then the CARES Act offers tax credits for 50% of what employers pay, what the law calls qualified wages that are paid while operations of the employer are significantly impacted by COVID-19. And we'll talk a little bit more about what that means. And I should note that both laws provide tax credits for what are defined as qualified health plan expenses attributable to wages that are eligible for the tax credit under either law. And again, we'll discuss more what this means in the coming slides. Next slide, please. So let's discuss the tax credits under the FFCRA. The idea here is that the sick and family leave that employers are required to pay under the FFCRA are to be funded in full by tax credits against employers' Social Security taxes, the employer portion of the Social Security taxes. And so employers are eligible for tax credits for up to 100% of the leave that's paid between April 1st, 2020 and December 31st, 2020, up to the caps that Angela mentioned. The tax credits would also include qualified healthcare expenses, which we'll discuss in a few slides. And also, the tax credits also include the employer portion of Medicare taxes that are on the paid leave. So in other words, whatever the employer would normally owe for Medicare taxes would be returned in the form of a tax credit. And I should also note that no Social Security taxes are assessed on this paid leave that's eligible for tax credits. And as Angela touched on, the key here is to document. We received some IRS guidance on this recently, and the IRS encourages employers to retain documentation to be able to substantiate employees' eligibility for paid sick and family leave. And they say, or they advise that you should keep these records for at least 4 years. Next slide, please. So I'll discuss the CARES Act Employee Retention Credit. So this is basically a tax credit against, again, the employer portion of Social Security taxes paid to what are called eligible employers. And to be an eligible employer and to be eligible to receive tax credits under the CARES Act, as an employer, your operation must have been either fully or partially suspended due to a government order that limited commerce, travel, or group meetings due to COVID-19, or your gross receipts for a calendar quarter had to be 50% or less when compared to the same quarter for 2019. And if this is the case, you would continue to be an eligible employer until the calendar quarter in which your gross receipts increased to 80% when compared to the same calendar quarter in 2019. Next slide, please. So what do you get a tax credit on? The tax credit is provided on, as I mentioned, qualified wages. And so qualified wages are wages paid to employees while you're an eligible employer. In other words, while you qualify for one of the two reasons that were set forth on the previous slide. Now, the rule is slightly different if, depending on whether you had 100 or more employees. And the measuring period here is you have to have 100 or more full-time employees on average in 2019. If you had 100 or more such employees, then only wages paid to employees who are not working while you're an eligible employer qualify for the tax credit. On the other hand, if you had 100 or fewer employees in 2019, then all wages that you paid while you were an eligible employer during this period would qualify for the tax credit. And in addition, qualified health expenses would also be included in the tax credit. I believe we'll talk about this on the next slide. Now, the tax credit you would receive under the CARES Act is for 50% of all qualified wages that are paid after March 12th, 2020 and before January 1st, 2021, while you are an eligible employer, of course. And this credit is capped at $10,000 per employee. Next slide, please. So let's talk about what qualified health plan expenses mean, because as I mentioned, the definition is the same under both the FFCRA and the CARES Act. And what this means is the amount that's paid by the employer to maintain a group health plan and that is allocable to any wages paid that's eligible for the tax credit. So I know that's a mouthful. What does this include? This includes that the portion that you as an employer pay and the portion that's paid by employees on a pre-tax basis towards group health coverage. However, if there's any portion that's paid by employees on an after-tax basis, this would not qualify as towards your qualified health plan expenses. Now, the IRS recently issued some guidance on how you figure out what your health plan expenses are. And their guidance, thankfully, is pretty flexible. It says that you can use any reasonable method to determine and allocate qualified health plan expenses. One easy way to do it might be to use the COBRA premium that the plan normally charges and divide it by the number of workdays involved in the credit that you're trying to figure out. The IRS also clarified that employer contributions to HRAs and health FSAs do count as qualified health plan expenses. However, contributions towards HSAs, Archer MSAs, and QSEHRAs, which are a specialized type of HRA for small employers, those contributions do not count. Next slide, please. So now we get to the important part. How do you claim a tax credit under either law? As I mentioned, the credit only applies to the employer portion of the Social Security tax. However, in order to have essentially an advanced use of the credits, employers can reduce all quarterly payroll withholdings that they make. This includes the employer and employee portion of both Social Security and Medicare taxes, and the employee's withheld income taxes by the amount of credit under either law that they are anticipating for the quarter. So again, the idea here is for the IRS to front the money to employers so that they'll be able to fund either the leave or the wages as applicable under either of these laws. Now, if you make a reduction and that's not sufficient to cover the wages or the leave amounts that you need to pay for the quarter, employers can also request an advance credit from the IRS for the remaining amounts. And the IRS has issued a Form 7200 for this purpose, and they said that they expect to start issuing credits starting this month. Hopefully, they're on track to do that. And perhaps the most important part of the tax credits under either of the laws is the refundability aspect of it. So if the credits you're entitled to as an employer exceed your total Social Security tax obligation, any excess is actually treated as an overpayment, meaning it could be refunded to you, assuming that you don't owe back taxes or there aren't any other reasons for the IRS to offset these amounts. Next slide, please. So just to briefly touch on a few other limitations for the credits, as Angela touched on, the credits are available under both laws to tax-exempt employers, but not governmental employers. And also, an employer can receive tax credits under both laws, but not for the same wage amounts. So both you're eligible, but not the same wage payments. Finally, you may have heard about the Ppp Loan Program under the CARES Act. And I should note that an employer who receives tax credit for paid leave under the FFCRA is eligible to apply for the SBA loan, but they cannot have the leave amounts counted towards the loan principal or towards loan forgiveness. Both the loan principal and I believe the loan forgiveness elements take into account an employer's payroll costs. So if you paid leave for which you were eligible for a tax credit under the FFCRA, that would not count towards either the loan principal or loan forgiveness. And finally, an employer who receives an SBA loan is ineligible altogether to receive the employee retention tax credit under the CARES Act. Next slide, please. I think this is the final slide. So briefly, I'll talk about the Deferred Payment Program for Social Security taxes. So under the CARES Act, you may have heard that employers can delay payment of their portion of Social Security taxes incurred between March 27, 2020 and December 31st, 2020. So March 27th was the enactment date of the CARES Act. And the way this would work is that 50% would be delayed can be delayed until December 31st of 2021. Then the other 50% would be owed on December 31st of 2022. Now, if you had a loan forgiven under the PPP program of the CARES Act, I should note that this deferred payment program is not available to you. And I believe that's my final slide.
Great, thank you very much. That was really helpful. As we have reached 12 o'clock, we will turn to just answering questions over the Q&A chat panel. So if the two of you are available to help go through some of those, and for those on the call today, we will start going through all of those questions. We also will be posting a Q&A to the Chamber's website as well. So when the Chamber sends out the link to that, you also see some Q&A documents there that will cover some of the topics. As a reminder, we will also have this recording and the slides available for folks to utilize as well. Thank you very much. So Angela.
Yes, I see some questions I
yeah,
want
so
to
you guys
answer. Do you want me to dive in?
Yeah, please do.
Okay, great. So I just want to preface all of this advice with, or this guidance rather, with the fact that these laws are changing, the guidance is changing, amendments are happening all the time. So, so what I say today may not be true tomorrow if the regulations are updated or laws are amended, etc. But I see a lot of questions about what sick time may be available to employees who are on furlough or who are laid off. And so I think there's several different questions and answers here. One is with the new law, the new Families First Corona Response Act, and the available sick time there. The guidance that has been put forth on those, on the availability of that sick time, is that employees who are on furlough, who are no longer working, because there's no work available to them, are not eligible for those federal sick time benefits, right? So if you're on furlough, because there's no work available, you don't get to access that potential bank of federal paid sick time. Now, I think the question is answered differently if you're talking about Washington paid sick and safe time, Seattle paid sick and safe time, and the Tacoma paid sick and safe time as well. Seattle has amended its regulations to basically provide for sick time when there's a reduction in hours, or when, you know, because of COVID-19 related issues, there doesn't even have to be a closure, a public closure of the business. And likewise, the Washington laws make clear that sick time is available when there are workplace closures due to health and safety reasons. And so we don't have further written guidance on that, but you know, our understanding is that even if the employees are on furlough, but they're still your employee, there's the possibility that they may be entitled to use paid sick time for a protected paid sick time reason. So that is the somewhat unclear answer on that with regards to the state and Seattle sick time. I think it's a little more clear, at least for now, with the federal sick time and the furlough issue. But that is the reason why some employers are opting to, you know, separate employment with their employees and lay them off, just, you know, so that there's not that potential sick time hanging over them. They know that there's a clear answer there. Let's see. I don't know, Rishi, if there's other questions you want to jump in on.
I saw one that I think I already typed an answer to.
Okay.
Nothing else I'm seeing, but I'm
A
still looking.
question. So Angela, during the shutdown, can employees choose to receive sick and safe time benefit instead of unemployment? How should people go about evaluating that?
Well, I think it depends on the reason why. So the reason why the employee wouldn't be able to work. So we have these new emergency unemployment rules that broaden the reasons why employees could qualify for unemployment, including people, you know, you're subject to a stay-home order and you're not able to telework. That's a reason for unemployment. You know, likewise, you know, you could use sick time for that closure as well if the workplace is closed down. Now, employees' sick time banks are going to be much less than the unemployment banks, right? I mean, the good thing about sick time is that it's a full wage replacement, but employees they only are earning, you know, under the state law, 1 hour for every 40 hours worked. So potentially they have, and, you know, we're at the beginning of the year, so maybe 40 hours were carried over, so that they may just have a finite amount of sick time. Versus this new unemployment program, you know, they could get greater relief because there's more benefits there that they could be eligible for with the CARES Act, the $600 payment, and then also the increase in the length of time for unemployment. So it kind of goes back to that chart that I showed you that has all these different scenarios and who, you know, what may be available to employees. It also sounds like, you know, if the employee is quarantined or under isolation because of an exposure in a workplace, that employee would be eligible for both, you know, paid sick time but also for state unemployment benefits, and could also potentially be eligible for these federal sick time benefits as well, if they're experiencing symptoms of COVID-19. So there's really a lot of different options. One thing to remember about the federal sick time is you can't mandate that employees use other available sick time before using that. And then with the state sick time, you can't require that use either. And then as an employer, you're not making determinations related to unemployment benefits. So you can let employees know their options, but you can't really mandate the use of these sick time benefits. Other questions? I'm looking to see if there's, I see questions about the emergency paid sick time law and what happens if someone is part-time versus full-time. There's a calculation within the regulations about how to determine how many hours that individual is eligible to receive. I think the FAQs on the DOL website address it as well, but essentially it's a prorated amount. So they don't get the full 80 hours if they're not working full-time, but the regulations provide more guidance on that and how you figure that out. Let's see, I see a question about, about the emergency FMLA, and the first 10 days is unpaid. That's correct. So the first 10 days is unpaid. But remember that emergency sick time under the FCRA law is also a covered use, is also due to school closures. So if you have an employee who's out due to school closures issues, the first 10 days of that would be unpaid, but they would use their emergency sick time leave to cover the first 10 days, and then the emergency FMLA leave would kick in to cover the remaining 10 weeks.
Okay.
Are there other, let's see. I think I've answered a lot of these that I'm able to answer.
Great. Well, with that, we will sign off. And just a reminder for folks that these slides will be available afterwards, and we will also post Q&A after this webinar. Thank you all so much. Stay safe and have a wonderful day.
Thank you.
Thank you. Take care.